What is a mortgage is what we're talking about today in the eCentral Business Show. I'm John Nayler and I'm joined by Laura Sillano, resident expert on mortgage lending. Now, what is a mortgage?
A mortgage itself, well, that's actually a legal term, but from a practical perspective, what the mortgage allows a lender to do is to take back a property if you don't meet their terms of their contract.
Yeah, so it is. So it fundamentally is something that allows them to take that property and sell it, or take control of that property if things go wrong.
Yeah.
Okay, great. Now, so within their mortgage process, why do they make such a big deal out of the value or the potential value of the property that you're buying should you be looking for a mortgage or home loan?
Okay, so if the lender's going to give you a lot of money, then they're going to want to know that if things do go wrong, that they have some chance of recovering that money. So if they've given you $400,000, they won't generally give you $400,000 in exchange for a pair of glasses or a computer keyboard or something like that. They want to know that what they're giving you the money for, they're getting a level of security that they will be able to recover that money should you not pay back the loan to them. Yeah,
no, so in conversations I've had previously regarding mortgages and lending and that sort of thing, the property doesn't val. The property doesn't val, you can't lend that money. What do they mean by that?
So that means that the property hasn't got sufficient, it's not valued high enough for the lender to give you the loan amount that you're wanting on it. So say for example, if you've bought a property for $400,000 and you
signed a contract or
signed a contract.
Yeah.
So and this happens a lot in off the plan purchases and things like that, where there's time in between signing the contract and then having to complete, where you might have signed the contract for $500, but the property 2 years later values at $450. The lender will only use the $450 valuation amount, not the $500 valuation amount, to determine their loan that they will give you.
Okay, and then it's up to you to come up with the rest.
Yep.
Okay, so that's all right. So in that picture then, so security and collateral, and those two terms are around about the valuation of the property.
It's around the value of the property. It's also around the type of property it is. Collateral actually is really an American term. We don't tend to use that in Australia.
For sure, yeah.
It's more used as security. And there's different types of security that have different perceived levels of risk to the lender.
Like for instance?
So say for example, if you, every day of the week, you would be able to buy and sell a house in Brisbane that's located within the 5K radius. And you'd have a really large market of people who wanted to buy a house in Brisbane because they want to live there.
Sure.
So the perceived level of risk to the lender for if something goes wrong with that contract with you is quite low, because they'll probably be able to sell that property to somebody else at market value.
Sure.
If you've got, say for example, if you're buying a farm that's north of Gympie somewhere.
Yeah, something rural.
Something rural that's really large, that's still security, it's still collateral, but it may not be as appetizing to the lender to take it without a more significant deposit from the person who is buying that property, because there's not as many people who would buy that property if you were to default on that contract.
Oh, so it represents risk for them, and of course we know banks don't like to take risks, or lenders don't like to take risks, and so whatever you do, that mortgage document, that document they hold over that property, has got to make sure that they can get their money back if the worst case scenario happens.
Yeah, they take calculated risks, and so that's and so knowing the value and the type of property it is, and what the market for that property is should you default, is something that they want to know a lot about.
Oh, sure. Okay, and that's what fundamentally collateral and security is about.
Yeah.
Oh, fabulous! Really good information, Laura. Now, how do people get hold of you at Pod Financial?
You can contact me on mobile 0422 320 497, or you can also email through to the office home@podfinancial.com.au.
Fabulous. Okay, Laura Sillano, the resident expert on mortgage lending on the eCentral Business Show. I'm John Nayler. Thank you very much for watching another episode of the eCentral Business Show. What we're doing on the eCentral Business Show is we're bringing you business leaders and the best of the knowledge. We want to bring them on the show and release that content so that that's something that we can share with you via this easy to consume format. So you can follow us across LinkedIn, Facebook, YouTube, Twitter, Google+, or just regularly visit the eCentral.com.au/show website, pick out the best things for you and educate yourself on that premise. Now there's video content there for you, so you can just watch the video and inform yourself in your own time. We've also now podcasting that content as well, so it's really simple to consume. You can listen to it on the way to work in the car or during your daily exercise regime. Beyond that, we're also looking to connect with business experts. So if you consider yourself to be an expert in your field, please make contact so we can schedule you in and have you come on the show so you can release your content and increase your brand across our format. Beyond that, we also invite people to send us their email address so we can send you our monthly magazine. And that's just the best of the content, the best of the videos for the month, put out once again in an email, arrives in your inbox, so you can just go through and pick out the things that are really going to educate you and advance you in your field of expertise and in business. We're a business-focused show. So thank you very much once again for watching, and we'll see you next time.